Hello and welcome back to Invest with Humility. My name is Bruno, and on this video, we'll just be discussing some important terms that you should be aware of. So, this should be pretty easy and it won't take too long. But the first thing we're going to discuss is the market. And the market is a place where people gather for the purchase and sales of products. It's a place where commerce dealing are conducted. So, just like a general market, the stock market works the same way. It's just that at a general market, here's where, they sell everything, but at a stock market, you're going to buy shares for a particular company. All right, so there's also an auction market. An auction market is a market in which the buyers compete on buying prices and sellers compete on selling prices simultaneously. So just like the market where you can just go and the price is set, you just buy your stuff and you move on. The auction market is where you go and you have to compete for the price. So, for some of you who have been in an auction market, you will have like an auctioneer who dictates everything, and people say the price that they're willing to pay for the particular item, and the one who has the highest bid, they're the one who are going to leave with the product. So that is an auction market. Okay, then we have a stock market. And a stock market is a market in which where shares of a public traded companies are issued and traded. The stock market provide companies with access to capital and provide investors with easy way to have ownership in the company. It's just a place where buyers and sellers of stock meet to transact. So it's as simple as that. Companies get the benefit of having more access to the capital, which investors are willing to pay. And in return, that is the easiest way the investor can get shares for the particular company. So let's say, you've been seeing Apple for, decades doing so well, and you say, you know what, this company is not going anywhere anytime soon, so I'm going to put some money in this company because in the long run, with the product line that they come up with, I'm sure I will get a better return in the future. So you get a chance to invest in these companies, and this company gets the chance to raise capital because your money, you've put your money in there, and they can use that money to innovate and make better products. All right, then we have a primary market. So this is where the issuance of new security happens. In this market, company raise funds by issuing new stocks through initial public offering. The underwriter, a company that helps other companies introduce new securities to the market, will take care of selling these stocks to funds and banks. So the primary market is a bit different, right? This is where, this is where companies would come in, an underwriting firm will come in and try to offer, shares of the company to the investors that they know. They will tell them that, hey, this company is going to be big and we're going to give you a chance to invest early. Typically, the the people who invest in the primary market is either like they need to know these underwriting firms, but it's not just like a general person. So you need to have connections in order for you to participate in them. So that is the one thing. But again, it could be a really good situation to get into if, for example, you are an early investor in this, like, in a really good company, because, you get the front end of like a potentially really, lucrative company in the future. But again, nothing is guaranteed. When you invest, you're just placing your hopes on, the ability of that company to be able to perform better in the future. Okay, so the secondary market, also called the aftermarket, is the financial market in which previously issued financial Instruments such as stocks, bonds, options, and futures are bought and sold. After the initial insurance, investors can purchase from other investors in the secondary market. So again, this is the post IPO. A company has already IPO'd, once they've gone through that process with underwriting firms. And now, in the secondary market, this is where you can just go to your brokers, and you'll see the stocks listed there. Now, typically when new IPOs come into the market, they're typically really priced up because everyone is excited and they want to participate. In my experience, I've noticed that, you can let this company, go for a few weeks because what typically happens is that the price will be pumped up for a little while, and then the short sellers will come in and short the market, so you get an opportunity to get into the market at a really um, less price. I mean, to be quite honest with you, this time of the year, maybe some stocks have recovered, but there were really powerful IPOs which came out last year, and now they're at a really good price. IPOs such as Rivian, which it came out and it was at a really high price. Now it's about $20. At some point, it was until like $15. I think that's a good bargain, even though we do not know where the direction of the market is going. No one can predict the market, but the potential upside is way higher compared to the potential downside, considering that it has already sold off a lot. So you just have to weigh those things, and to consider if you're investing for a long term or you're just, you know, trading it, you're just swing trading it. Um, but again, with stocks like those, you have a better chance putting your funds for a long time because you really do not know what may happen. But either way, that's absolutely your choice. Just educate on, um, trading and investing, and weigh your risk tolerance level, you know, and you know, whichever choice that you make, you're going to get the results for it. But do not worry, I will help you with educating you when it comes to making those choices. But you eventually have to make the choices. I cannot make investment choices for you. I hope that is clear. Okay, IPO stands for initial public offering. This is the first time that a stock of a private company is offered to the public. It is very hard for regular investors to get shares at the IPO. Okay, yes. So this is where this is the first time investors would have regular investors would have access to the IPO shares is after um, it's after a company IPOs. So typically the people who can invest in IPOs will be, like big, fund investors, like hedge funds, or if you're a qualified investor, meaning you have assets totaling, I think about 5 million now in the United States. It depends with where you live, but that's how you can participate in this. So it's really not straightforward for you to like participate in IPOs, but studies have shown that sometimes you're not getting like it's not necessarily that you're winning when you participate on the on the on the company before the IPO, because chances are you know you it will come to the stock market and prices will come down. This has happened to stocks such as Robinhood, many stocks. Even Uber at some point, the stock went really lower and investors were losing money, and then it rised up. You may see this in Rivian, you may see this in many stocks, Coinbase. All these stocks, when they initially came out, the IPO price was really high, and now it's really small. Now, when you're an investor, after the IPO, you cannot sell your shares right, as the IPO goes. Is you can sell it after a particular period of time, and depending on how the stock is performing, you may not be able to sell it at a really profitable rate, depending on how the stock is performing. Or you just have to hold onto the stock, for a longer period of time and see if the stock recovers. Um, and again, the stock market is just this is what you will know is like most of the time it's feeling based, because if you think about it, most of the companies are really operating under loss, even though they may be good companies. And the reason for that is that they're innovating, right? And the only hope is that for most of these companies is that they start making profit in the future. There's like a really small amount of companies which are actually profitable, meaning they do not have a lot more debt compared, to to what they're to what they're making. So, companies such as Lee Auto, you'll see there are some other companies which, you know, they do not have a huge amount of debt and things like that. But one thing you'll notice in the stock market is that, it's typically moved with news. If, for example, there's news hyping a particular company or particular stock, then it will influence the price actions. If there's news related to the earnings and things like that. So do not really fall in love with one particular company. Just put those things in mind. If you're investing long term and you believe in a company, I recommend you pick solid companies which have been there, for a long time, and they're, solid in producing good products. If you're day trading, do not fall in love with a particular stock, because sometimes, sorry, if you're trading, don't, either day trading or swing trading, do not fall in love with a particular stock, because sometimes, you know, there may be some news which come in, and depending if it's good, the stock will rise. If it's not good, it will drop the stock, 20% or like 30%, let's say if they miss their earnings or things like that. So be aware, especially note whenever you're investing in any stock, note the dates where major news come. Typically is, when you hear that the earnings are coming, there will be a pump, and then prior before the earnings or around the date where the earnings are coming, there will be a huge sell-off. you know it just depends, but you should be aware of those things, because you do not want to get wiped. Or if you're investing for long term, you can just hold on depending on the fluctuation, if it goes up, if it goes down, because you're just hoping, if you're investing long term, let's say for a year, 2 or 3, that eventually the price will go up. Okay, I hope that video was helpful. Sorry, we went sidetrack a little bit, but I hope you enjoyed the content. Until the next video, yeah, thank you.